cigarette manufacturer BAT Kenya has posted an 18% rise in profit before tax for the year ended December 2025, despite a sharp increase in illicit cigarette trade that now accounts for nearly half of the domestic market. The company says cost controls and currency stability helped cushion the impact of falling revenues. Jasmine Wamboi reports.
British American Tobacco Kenya returned to profit growth in 2025, even as illegal cigarette imports tightened pressure on its top line.
2025, we delivered a profit of 7.7 billion shillings profit before tax, and this represents an 18% growth in comparison to the results that we delivered in 2024.
However, net revenue declined 10% to 23.2 billion shillings, reflecting what the company describes as a surge in illicit cigarettes in the local market. According to third-party research cited by the firm, illicit cigarettes now account for 45% of the domestic market, up from 37% in 2024. This cost the government an estimated 12 billion shillings every year in lost tax revenue.
The big issue is the porous nature of the borders, especially with Uganda, where the majority of the illicit trade emanates. But I think beyond just unscrupulous players smuggling the product in, one of the systematic issues that underpins the presence of illicit cigarettes in Kenya coming out of Uganda is the tax differential between the two countries. So we have an issue where the tax in Uganda is almost half of the tax in Kenya, and that tax differential creates a massive opportunity for people to engage in the illicit trade.
To cover the dip in revenues, BAT has narrowed its cost base. Total operating costs fell 15% to 15.7 billion shillings. Finance performance also improved significantly. The company recorded a 200 million shilling finance income compared to an 800 million shilling exchange loss in the previous year, helped by the relative stability of the Kenyan shilling against the dollar and tighter cash management.
And I think one thing that's going to be crucial, at least in the medium term, is making sure that we don't see tax hikes on our category, because this will just force the differential between taxes in Kenya and taxes in other neighboring countries, which will exacerbate the problem.
Exports remained a key buffer, contributing roughly half of total revenue, while sales of oral nicotine pouches resumed in the second half of the year, further supporting performance. The board has proposed a final dividend of 60 shillings per share. Combined with the interim payout already made, this brings the total dividend for 2025 to 70 shillings per share. This reinforces the stock's position among the high-yield counters on the Nairobi Securities Exchange. Jasmine Wamboi, Citizen TV.